Let's get across the market open. Henry Jennings joining us from Marcus today. Henry, happy Wednesday to you. So, a bit of a flat to negative night on Wall Street, but today we are looking locally as though we're going to have a very positive start. What are you seeing on the market at the moment?
Yeah, good morning, Andrew. Yeah, I'm quite surprised actually. The SPY is sort of up 50 odd points this morning. Wall Street did very little overnight, but gold was up 1.8%, and we certainly can't keep a good man down in that gold price. And when you look at it, it's only sort of $200 off its all-time high. And when you think about it in terms of that, the secret, I guess, for gold miners is not the spikes, because it's very hard to take advantage of the 3,500 US dollar spikes, but it's how long it stays at elevated levels, and that's really the key. And we have seen it staying at quite elevated levels. So expecting a little bit of a bounce in the gold stocks today. I'm not sure that's going to be 50 points, but I did think that we'd get to 8,400. We got there, well, bar 2 points the other day, and it looks like we could have another go at it today. The banks yesterday very much drawing investors' money back in. CBA, it's incredible, isn't it? You know, record highs in CBA yet again, and yet again, analysts scratching their heads as to why CBA keep going up. And it's very simple, and it goes back to something we've talked about before here in terms of retail investors who bought into CBA at maybe $5.40 are not really that keen to sell. So with no sellers around, and we did a sort of a straw poll at an ASA conference, there were very few people in the room that were ever going to sell CBA. So with all the passive money flows in, 11.5% of the market, CBA will continue to be the Rolex stock in the market, the Rolex bank. But a couple of weeks ago, I suggested buying NAB and selling CBA on what we call a pairs trade in terms of relative performance. And NABs has actually outperformed, and it's been bouncing quite nicely after that drubbing it got back in February on the back of its results. So still prefer NABs in some respects, but no one's really going to sell CBA. So my words of wisdom fell on it was pearls before swine, really. So no one's going to sell CBA. NABs are pushing up, so I just suggested basically just buy NABs, and that one has worked out pretty well.
Well done. Now elsewhere, Westpac too. This morning, we're looking potentially. Well, I mean, we've got new leadership at Westpac looking to make his mark clearly, and I guess if you're working at Westpac, you may be a little nervous because they are looking at significant job cuts.
They are 1,500 jobs to go, apparently. New Chief Executive Anthony Miller obviously making his mark. Interestingly, of course, we've got new CEO at ANZ as well. So maybe where Westpac goes, ANZ will follow. They do tend to sort of work in lockstep. But clearly yesterday, the rate cut that we saw, which was a lot more dovish than hawkish, was positive for the banks. It does help the mortgage holders and the borrowers in terms of bad debts, etc. So that is a bit of a boost for the banks. And certainly, the market generally, I know it's a horrible thing to say, but the market generally does reward companies that trim staff, however they do it, but and cut costs. And obviously, this is the first move by Mr. Miller as CEO of Westpac. So it'd be interesting to see whether the ANZ CEO follows suit.
All right, Henry, elsewhere, James Hardy out today as well. Look, certainly a focus too on that ASX acquisition in the US, which shareholders were very annoyed with.
Shareholders were very annoyed with the ASX takeover. These are the guys that make pergolas and various other things in the US, decking, which obviously fills a bit of a product hole for James Hardy. But the price they paid, very high, according to analysts, and the corporate governance was called into question because shareholders didn't get a vote on what is a very dilutive takeover. So we saw today I guess the reasons why they have to buy something like ASX, because we did see earnings slip 4%, 3% decline in net sales. So they need to find a bit of growth there. And ASX is obviously the path they've taken, but the market's still pretty unhappy with it. The stock was down around, I think it was around 2% easier in the US, so it certainly didn't cheer the market, and I would expect to see our James Hardy listing fall as well today.
Elsewhere, MinRes, have you had a chance to get across what we're seeing there, particularly in terms of production?
Well, I guess it's a ore and mineral resource update, which I guess, although is slightly positive, but at the end of the day, it's not going to be transformational. They have got a new chair coming in. There's obviously still corporate governance issues around it. And the biggie, of course, is the $5.2 billion in debt that MinRes has on its books. So, there's obviously some upside for them in terms of that resource update. So that's, ore reserves rose 73%, and we had 89% in the mineral resource at Onslow Iron Ore Project, almost doubling since September 2023. So that's positive, but it doesn't take away from the fact that it has got a pile of debt, it's got a pile of issues in the boardroom, and still the market, it falls in and out of love with it, and it is a heavily shorted stock. So every now and then we see a big push higher. This is slightly positive news, but we're not going to see any kind of massive sustained rally back towards its former glory days until we get this $5.2 billion debt under control.
Yeah, Simon, at what point would you buy back in, Henry, given how far it has fallen? And obviously you talk about those problems that needs to overcome.
Yeah, well, I guess, it's rallied quite nicely from it to get down to 14 bucks or something, 14.50. Here we are back at $24. So it's had a pretty good rally. And those people that bought in wisely when it got down low below 20 bucks have done all right out of it. But yeah, it's a hard one. I think it's a day-to-day proposition really in mineral resources at the moment. Any piece of bad news could send it flying downwards again. So yeah, it's not one for the squeamish. It is speculative. I think I'd be a buyer back around the 20 buck level. I'm not going to be chasing it up here. So 20 bucks seems to be the kind of level of some sort of short-term support. So that would be my price to buy it.
Yep. All right. Elsewhere this morning, Seek has a investor briefing or update.
Yeah, it does. I haven't seen all the details of that one. Let's just have a little look. We've got a trading update. Recent upgrade of ad titles will support low double-digit yield growth. FY guidance there. We've got revenue in the top half of the 1.06 to 1.1 billion. Interest costs will be lower than guidance following partial sell down of Employment Hero. So on the face of it, that doesn't look too bad. But I'd have to see some more details in that one. Haven't had a chance to get across that completely yet.
All right. Well, let me put you on the spot again. Webjet Group.
Yeah.
Have you had a chance to have a look at that?
Geez, you love putting me on the spot,
I do.
Don't you?
Yes.
I guess, WJL at the moment. This is WJL we're talking about, I guess. It's, I guess at the moment, the results and the numbers out this morning are probably kind of irrelevant given what's happening in the background in terms of big shareholders and potential tie-ups with Hello World and things. So I suspect that's going to be more of a driver. There was a decline in bookings for full year revenue, down 3%, but they did see improved margins. Bookings down in March, 7%. But they would be broadly in line, they're talking about, in terms of guidance, assuming no further deterioration in trading. And you'd have to think, with interest rates coming down a smidge, that will help travel companies generally. But I don't know, have we all got travel fatigue? I'm not sure. But, after COVID, we all went out and traveled extensively, and now we're all going, yeah, you know what? I know I am. But I think the Webjet is more about boardroom and M&A than revenue at the moment.